Good morning, good afternoon, good evening. Welcome, welcome, welcome. Welcome. Today, we have a special guest in a new area that we haven't really discussed much on the finance side. We have the CEO of Mindspan Systems, Rich Edwards. And Rich has a very interesting background. It's in engineering and back with the military. And I really love talking about that area because there's so many listeners that have that experience and never really think about going forward to Web3. So I'm going to turn it over to Rich and let him introduce his background, who he is, and how he got there in the AI engineering Mindspan system space. So, Rich, I'm going to turn it over to you. I like the guests to really introduce themselves and what you want us to know.
Sure. Thanks for having me, Donna. I really appreciate a chance to come here and talk to your audience. Yeah, I had a very unlikely background that kind of led me here. So currently I'm the CEO of Mindspan Systems, and we're a professional services firm largely in data engineering, data science, in the software space, largely for community banks and smaller financial institutions. And we really kind of help them with their data and create more personalized, more relevant services and experiences for their customers. How I got here is a very unlikely path. I originally went to undergraduate school for engineering. Went to a school called Rensselaer in New York, and went there on an ROTC scholarship. So when I graduated, I was a mechanical engineer and went into the Army as an engineer officer. You'd be surprised that doesn't always work out like that, but it was okay. And this was in the 90s, so it was a totally different experience than what the past 20 years has been like. I did that for 4 years, and it was a great experience. I had a great time, but I had met my girlfriend and now wife at the time. We decided to get married, and that really wasn't super conducive. Not what I wanted to do, long term with my future with her and her career. So I got out in '99 and worked in manufacturing for a little bit, and ended up going back to school. Got my MBA from University of North Carolina, Chapel Hill, and it was a great experience and kind of helped me move out of really what it was geared towards, and the value of it at the time was really being able to change your career mid-career. And I'd gone from engineering and operations into marketing and business management, that aspect of things, and ended up moving over to IBM. And I worked in their software business for a little less than 13 years, and did a bunch of different things. Did some M&A work in there, and some strategy work, some analyst relations bit, and then ended up working in data center automation. So this is like very large data centers, and particularly towards financial services, and ended up working a lot with the banking and government industry on very large data stores, very, very high volume transactional execution, monitoring, et cetera. And in 2013, I got tapped to go work in a new business unit in what would become IBM Watson. And this was the artificial intelligence business that, when they were kind of really ramping up on this after gotten a lot of exposure and focus and interest after the Jeopardy challenge, having an artificial intelligence program, compete and win at playing the Jeopardy game. And there were some things they were doing in the healthcare space, particularly around cancer research and cancer treatment, that was, at its core, a knowledge management system. And they said, well, what we want to do is be able to have, instead of a branded IBM offering, a thing that we do, have our customers build on top of the technology. And they tapped me, not because I knew anything about AI at the time, but I knew how to get stuff done in IBM, in the large organization, particularly very rapidly bringing new offerings to market, which in any large bureaucracy, you kind of need a Sherpa guy to do that. So I was the guy on the team to do that. And then in the process, I spent almost 4 years really just drinking from the fire hose of like understanding what this was, what was kind of new and emerging about it. And again, this is 10 years ago. So
Right.
It was a really great experience. And I got exposed to a lot of different, partners, and particularly IBM Research, which is, from my perspective, the crown jewel of that organization. There's a lot of untapped potential and a lot of, you would say intellectual capital, but really like fundamental research and understanding of many different domains and areas, but in particular natural language processing. And we were able to go in there and begin to look at what the researchers were doing and what they were able to do more or less as demonstrations, and bring that to market as a product. And that was really kind of what we did for the first 4 years. And it was really the first time, other than things that were more geared towards telephony, like Google was very good at this because they play in the Android space, the Android marketplace space, and their infrastructure. Other than that, there wasn't really a player that was doing artificial intelligence as like a platform service, as something you could build a bespoke application on top of. And that's really what we were doing. So that was an amazing experience. Changed the course of my career. It was like going back to school and getting, another graduate level degree in a new area. And it was really interesting, and I had a great time. And in 2017, it was, I was kind of at that point where it's like time to do the next thing. And I had the entrepreneurial bug for quite a while and have been looking at it. And I'm like, all right, guy, you're getting into your mid 40s here. You're not going to have too many bites at this apple if this is something you really want to do. And so what I did was I kind of went on a search to try to find a company that, I could either partner with or maybe buy, and particularly looking for one that had the data analysis, the really core data skills that I thought were really going to be important and necessary for this kind of next stage, and ones that were particularly had experience with regulated industries. And eventually that led me to Mindspan Systems, because they had a great background in banking, in credit, in financial services, and healthcare as well. And those are all areas that have a very, very heavy regulatory burden on them from a compliance standpoint, and from just like their license to do business. And data is a big part of that. And so someone who's good at it, who has the trust of those institutions to come in and work with their data and help them get the most out of data, that was the core thing for me. And that led me to Mindspan Systems. And so that's kind of what we've been doing, is this kind of shift more into getting better use of AI, getting better use out of data. And AI has certainly been a big accelerator for that. And so that's kind of what I've been doing since 2018.
So since 2018, when you talk about data, can you just paint the picture a little bit for some of the people in the audience that don't know what's included in that data? What type of data? What type of demographic?
Sure. Yeah.
What type of information do you have?
So one way to think about data is, this is kind of my quote unquote business data, right? And a lot of times when we think about that, you're thinking about financial statements, transaction records, and a way to classify that is to kind of talk about that as structured data. And all structured data means it's in tables and rows. It's in a spreadsheet.
It's like an ASCII file in a way.
Sure. Or it's in a spreadsheet, or it's in a database, or it's something that's aligned along a certain pattern, and it gets queried and manipulated and tabulated in certain ways, right? The way spreadsheets have worked since Lotus 1, 2, 3, right? In the early 80s. So that's one aspect of it. And people are very, very good at getting a lot of value out of that, getting a lot of insight out of it, monetizing it in ways like being able to make, very informed decisions about their business, their customers, where they're going. Really good at it. What they're not great at is doing the same thing, or at least being as nimble and productive and efficient with it with unstructured data. And unstructured data is basically everything else. Anything that's not in a spreadsheet, not in tables and rows. So plain text, video, audio, machine data that's like coming from your transactional system, or even like IoT devices or things like that. Things that are not structured in a way that like lends to, well, just dump it in a spreadsheet and add up column E, right? Where that becomes really hard to do. And it turns out a lot of the systems and the underlying technology that goes into a lot of artificial intelligence systems and machine learning, particularly natural language processing, becomes really good at extracting information from that, either to ask a question or to leverage it to get insights out of it, or manipulating it into something that either is or looks like structured data that you can then put it into a spreadsheet and do things about, right? So you think about some of the really simple use cases that people are using like ChatGPT for today, right? Which again is a miracle. It's amazing. It's just pure magic the way it works. But again, it's an evolution of a lot of the capabilities and use cases that have been around for quite some time. It's more accessible, it's easier to get to, and frankly, it's cheaper. But being able to summarize things like a news article very quickly. What's this about? Who's mentioned in there? Is it generally positive or negative? You start talking about like sentiment analysis, right? That's been something that people have been making money on for quite some time now, particularly in the financial trading space, particularly in the journalistic space. Understanding like what is trending, understanding if there's myriad of businesses that just do like social media monitoring to say, tell me how frequently or if there's a change in the trend of when my brand or words associated with my brand are mentioned, and what is the trend in how they're being mentioned. Is it positive? Is it negative? Is it being associated with other terms or other brands? Am I happy about that? Am I not happy about that? Right. But really being able to sift very, very large amounts of data quickly and efficiently to make decisions, right? And understand is if we're doing brand advertising and we're trying to create a positive association of us with, say, an event like the Olympics, right? Or something more recent with the Barbie and the Oppenheimer movie, right? Something like that. Are you going for that? Is that working? Do we actually see that? Are people mentioning us in those time frames? And am I able to do that in a way where I'm just not flat out buying my way in? I'll give you one like great example of that. A couple of years ago, the Netflix show Stranger Things, right? The first season kind of came out of nowhere and it was really interesting. And I think it was a year or 18 months later when the second season came out, it became this huge branding opportunity, right? Everybody wanted to jump on that and they wanted to have the characters in the box, particularly for like consumer packaged goods, right? Stuff you're going to see in the grocery store, stuff like that. Now, the one obvious example of who would do that is Lego. Not Lego, Eggo. Sorry, Eggo waffles, because they're featured in the show. There's a whole piece with one of the starring characters about this affinity with Eggo waffles, and it shows up. And it wasn't product placement; it was usually an interesting thing. So you would think when they come around again, oh, they're going to jump on it, and they didn't. They were very smart about it. They didn't pay the licensing fee to kind of be this official sponsor. But they did a lot of very, very clever advertising and placement, and particularly in social media groups around it, to draw that affinity together, to kind of put it in there. And if you want to look it up, it was the ad firm was Wyden Kennedy did this. It's very, very clever. It's very, very good. But they were able to kind of show how well that was working, where it was working, and the channels that they should invest more, invest less in, really focus their effort. And on a very, very small budget, there's some incredible like 8 or 9 figure number of the incremental revenue they were able to drive on like a ludicrously small advertising budget, right? But it was having those insights of where to go and understanding what was working and what wasn't, pull those levers in there. That's the type of thing at scale that you practically couldn't do with people. You really need machines to do that at that level.
That's really true. So let me ask you this. So what have been some of the bigger trends that you've seen in the banking side, the finance side, and the institution side? And what is it that surprised you that's not taking place that you thought would?
Yeah, I think that two things there, I'll say. One on the AI side, because that's a little bit more our vein. I think it's still early. There's certainly a lot of interest there. And one of the things just in general from like a banking and financial service standpoint, again, they're a regulated industry, meaning even the way that they handle their customers' data, not alone the money, but just the data that they have gets heavily scrutinized. And there are very, very big risks from a reputation and, just from a regulatory oversight and fine standpoint about what government agencies can do to banks if they mishandle information. So they are naturally reluctant and skittish. They don't want to be the first ones out the door. That being said, they are very much interested in connecting deeper and having more relevance with their customers. So things that get into like personalized marketing, personalized experiences, using what they know about you to present a way that is more tied into what you're actually trying to do.
Okay.
The gold standard is always Amazon, right? Amazon is always amazing in showing you the thing that you're looking for. And when you look for something, it's, well, if it's not that, is it maybe this? Right. Fantastic. And a lot of these principles are driven on that. So that's one thing. I think it's early days, but it's certainly there. The interest is there. The other one that's maybe more tied into your audience is the crypto markets. Like, why has crypto not really taken off in the traditional banking sense? And there's my opinion is there's really two pieces. One is the regulatory part. Like there's a lot of resistance to that. You look at like the head of the SEC, Gary Gensler. Like he is openly hostile towards all things cryptocurrency, right? There's another angle around smart contracts and things that sit on the blockchain, and that there's more gray area there, but specifically cryptocurrency, you see like strong resistance from a regulatory standpoint.
Exactly.
And if you're going to be a financial institution in the U.S., I mean, you can look at what happened to FTX, what happened to Binance. Somebody's going to jail for a very, very long time if you're operating outside of that structure. Like there is very little room for that. And that's the history of that. And there's reasons for that. And a lot of it has to do with public trust. But so again, there's a hostile environment, and I'm not exactly sure how that's going to play out. You've seen a rally in Bitcoin as of late, and that seems to be around the belief that there might be like an ETF that will have blockchain in it. BlackRock is one of the firms that they kind of think they're going to get regulatory approval for it. We'll see. That remains to be seen. But that's one angle. So regulation is tough. The other one is just overall relevance. And just I'll look at my notes here. There's a little back of the envelope math, right? If you look at if you look at it from the standpoint of like just storing of value, storing of currency, right?
Right.
All the cash that's sitting in banks in the U.S. today it's about 17 trillion right now. If we add the value of the stock market and just like the New York Stock Exchange and NASDAQ, there's 25-20, so about 46 on top of that. And then if you add the bond market, the U.S. bond market's on top of it, it's about another 51 trillion. So altogether, those 5 classes of assets are about $115 trillion. That's the value today. If you look at Bitcoin and Ether, Bitcoin, I think is a little over 800 million. Ethereum's around 250 million. So they're like just over $1 trillion, which is to say just the amount of monetary value that's stored in those two systems cryptocurrency is about 1% of everything else, right? It's a rounding error.
Mm-hmm.
So if you think of institutions that are saying, I have the potential to, maybe add 1% to, what we're doing, our bottom line is, or higher if you're only looking at, say, the banking industry or something. But still, it's a very small percentage, and it represents a huge risk to them from that standpoint, right? All the things that they will have to do in addition to, from a compliance standpoint, two of the very big ones that cause problems, particularly from a transactional standpoint, is KYC, or know your customer, which is basically like the bank has to know who you are in order to do business with you. And that's pretty much from a financial crime standpoint. That's why that is. And then the other one is AML, or anti-money laundering. And those two activities represent both a big cost and a big risk to the bank. So for them to say, we're going to, maybe in a way you don't entirely know how much, but we're going to greatly increase the risk, your compliance risk, for like a little bit more market access, like that math is not going to work for a regulated industry. Now, that being said, the consumer gets the final vote, right? Like if people were demanding this, if this was like, I'm going to take all of my business elsewhere unless I have access to crypto markets from how I do business with you, they're probably going to figure it out, right? Because it almost turns into an existential risk at that point. But you're not seeing that right now. That's not happening. So that's just on the size of the market. And if you look at it from a transactional standpoint, if we look at Ether, so Ethereum in the last 12 months was about $650 billion, just the value of money getting shifted around, the monetary value of that. That's not bits or anything, rough numbers. Bitcoin was obviously much higher, about 7 trillion. But again, if you look at all payments worldwide, in the US, it was about $128 trillion. And this is from the Fed. This is 2021, the last time they did a payment study with the Federal Reserve. But again, it's like 100 times as much. It's much, much bigger. And the majority of those payments, meaning how people and businesses move money around, over 70% of it are bank transactions. So these are like checks or automatic clearinghouse, debit transactions, things that are going to go through your bank, through your banking account. Vast majority of it. So again, you have these same institutions that are involved, the same ones that are looking at this as maybe incremental value, maybe not. But again, it's a whole lot of risk, a whole lot of cost for maybe just a little bit of benefit to them, a little bit more business. So unless some of that like huge part of their deposits or their transactional volume that they're doing today is at risk, I don't see them doing a lot to really make this easier. Like they're not going to be advocates for this.
So does that mean that most of the blockchain crypto developments in the DeFi world, or even in AI, would that be more, let's say the early adopters would be in your non-traditional decentralized space versus seeing any type of traditional development in finance and banking because of some of those reasons in governance and some of the other reasons in the attitudes towards crypto? Is that why we see newer non-traditional organizations going forward, let's say in European markets or other markets where in Africa or other places where you need to develop an ecosystem or however you want to pronounce that? How is that what's really taking place that people are seeing, or why that's happening?
You see like the big one that everyone points to is obviously Coinbase, right? Which has been successful in the US as a company that has kind of worked within regulatory guidelines to a certain extent. I know there's a lot of friction there. If you read the CEO Brian Armstrong, I mean, he's been very vocal about the difficulty of working with all of the regulatory agencies he has to deal with. I think he's very pointed about the SEC, which is openly hostile to his business model. So again, from a financial, particularly from a banking standpoint, would there be enough business for another Coinbase or for one of these very large financial institutions to get into this business? I don't know. I think there's got to be, something has to change because the environment today doesn't seem like it makes sense for them. Where I think there might be an opportunity is on other types of financial services. And I'll give you one example. There was a really good article in the Journal, and we could put a link in the show notes, at Wall Street Journal a couple of weeks ago, and they were talking about how large property and casualty insurance companies were leaving areas that seemed to be affected by climate change. So Florida, California, Gulf Coast states, where they were seeing an increase in the rise of natural disasters that they were having to pay out on, that it was becoming too unpredictable. And as they pulled back, and, as if you're a homeowner or a business owner in one of these states and you can't get flood insurance, for example, there started to be other organizations, other companies that were stepping up, that were stepping into the market. And some of them were fintechs. And one of the more interesting ones is this idea of parametric insurance. I'm not exactly sure where the name comes from. But it was this idea of basically they would have very, very simple contracts that would pay out under very specific situations. And the one example they had was a restaurant that they had an insurance policy that would pay out if the water monitor that was installed in their restaurant triggered at certain levels. Right. They had this IoT device that worked on its own network. And if the water got this high, they got $2 million. And if it got this high, it was $4 million. And if it topped out at the top, it was $5 million. And it would automatically pay out. I'm sure there's some fraud piece in there because that sounds like that would be easy to game. But it was this idea of like very, very simple, like if my store floods, you pay me X. I don't have to go through this kind of more traditional piece. And that's the type of thing that on the surface of it sounds an awful lot like a smart contract, right? If such event occurs,
this is what happens.
This transaction takes place. Now, does that make sense for a blockchain instantiation of it and for it to be executed there? I don't know, but it kind of looks and smells that way, right? It looks like there's a potential there. And if you see more traditional regulated industries beginning to kind of pull back on this or not being able to evolve into how the industry is changing. In this case, it's this weird thing that has to do with the weather. It has nothing to do with consumer behavior or, regulatory pressure, or it's completely devoid of politics. They're making adjustments and they're looking for new ways. And there's companies that are willing to take that risk and try a new business model. So that's interesting. I think there's opportunities there. And that's an area that it is regulated, right? And it's regulated at the state level, which maybe gives them a little more leeway for states like Florida, California, Mississippi, Alabama, right? That are being affected like this, that probably aren't getting a lot of help from the federal government for like, how do we create a regulatory environment around this that, one, there's a market for our citizens, that they get the products that they need, but also gives us the ability to kind of oversight of this industry and control it in a way that falls within the guidance of the law and takes care of our customers. And I think you're going to see more willingness to experiment there and be open to new things like that. And maybe things that are, run and sold and operated on a blockchain environment.
But with the AI and your company, Mindspan Systems, what are the major impacts of AI that you've been really happy with in some of the clients or services that you provided in your business? What are some of the AI aspects that we should be on a lookout for that have really made an early on impact?
Oh, sure.
And see that really growing. Talk about that.
Yeah. So at one level, there's kind of two ways to think about it, right? There's the things that I can do that are really incremental in their impact, right? I'm a little bit faster. I'm probably maybe a little bit or even a little bit more cheaper in what I'm doing, right?
Mm-hmm.
Things like, copywriting and being able to do, I'm not buying stock photography anymore. I'm using something like Midjourney or Dolly or something to kind of do some of the assets that I'm pulling in there, right? That's an idea of, I'm not doing anything different. I'm just maybe a little bit more nimble and maybe a little bit more efficient in how I do it, right? And then there's the other angle. There's the angle of, I'm going to do something, in either how I operate my business or how I interact with my customers that wasn't even possible before. And the best analogy here that I use is I say, okay, a lot of people think about AI as being this one giant monolithic thing. It is a thing that does all these magical pieces. And to a certain extent, that's true if you think of it as like a single interface. But the better analogy is to think of it as a million little workers that are helping you do things.
Mm-hmm.
And when you think about that worker, the best mindset is you think about like the typical college intern, right? Somebody who comes to work for you for the summer, who they're diligent, they're on time, they can listen to instructions, they're literate, they can do all of these things in a very competent way, but they don't know anything about your business. They have no judgment or experience or anything to kind of hang decisions off of. But if you tell them what to do, they will do it. And they will do it very quickly and eagerly and earnestly. But there's not going to be they're not going to layer in any context or nuance to the whole thing. Right. Mm-hmm. So you could have this intern and you go, look, here's this 50-page industry report, and it's about us and about our competitors and maybe the trends of where we're going. Read this, come back after lunch, tell me what it was really about. What are the 3 things I need to take away from it, right? Yeah, any college intern is going to be able to do that. Like they're mm-hmm. going to be very competent at it. And maybe you could throw that at them, all summer long. And maybe by the end of the summer, they'll know a little bit about your industry and be able to start to connect the dots, right? And the way to think about kind of AI and where the potentials are is, okay, what if you didn't have one college intern? What if you had 100? What if you had 1,000? What if you had 10,000? And it wasn't like you had to manage 10,000. Like, what if they were really good at working together in a mm-hmm. coordinated fashion? And it's just as easy to tell 10,000 of them to do something as it is to tell one. Well, what would you do different, right? If you're in a retail environment, and you have somebody who's working there, maybe they're working the cash register or they're working in sales. Mm-hmm. What if they had 10 interns that were there as their assistant, right? Who could whisper in their ear, this person you're checking out right now, they've bought this same thing 5 times before, once every other year. The past 3 times, instead of this shirt, they also bought a pair of pants with it. Why don't you suggest they get the pair of pants as well? Because they know that person, they know the history of mm-hmm. what they're doing with mm-hmm. them. Now, this person working the register, they're probably like a new employee. The turnover in retail is they've probably only been working there 3 or 4 months. They don't know this person. They don't know the history, but their assistant might, and a really good assistant and somebody who really knows how to do that job well, can very easily prompt them to say, also suggest this other thing and say it this way. And, present it this way. And this is the best way to, right? You're giving them expert advice to make them much better at their job than they would be normally without any of that assistance. And you begin to see like, oh yeah, no, I could really do things differently if I had access to that level of assistance, that level of human capital. Well, that's really where a lot of the potential around AI is, right? If you just said it, if everybody in my bank branch, and this is one we use an awful lot, right? Everybody who is there working had 10 assistants that they could delegate all of the tediousness of the mm-hmm. job mm-hmm. and just focus on the parts that require them to be there, that require that human interaction, where they don't have to worry about some of the other things that are, kind of look like busy work and, some of the compliance things, some of the things they do from just the ins and outs of running a location like that. If you could make them like free them up just to do the thing that is they're really good at or they need to be there for, and they do it even like 50% more during the day, how much would that change your customer's experience? Like, how much better would it be? What could you do for that customer that you can't today because you only have so much bandwidth from the people that are working for you? So it's this element of, making a lot of the people, particularly the people that deal directly with your clients, more focused, more present in what they're doing, and adding in, people will say intelligence, but a lot of times it's empathy. Being able to add in the understanding of who they're dealing with and the best way to serve them, that's magic. So it's not the incremental. It's not the little bit better, a little bit cheaper. It's we're going to do something that you've never experienced before because frankly, it wasn't possible, but it is now.
Is there anything that keeps you up at night that you worry about that we should be aware of, or something you want to share in regards to everything as the CEO, your background in AI, and you're the visionary? Yeah. You've got everything operating. You're going the way you want to go. Life is lovely at Mindspan Systems.
Yeah, never ask somebody who owns a business that question because there's 1,000 things that keep us up at night.
Well, tell us maybe two.
No, I'm joking.
Two that you want to share.
I think the biggest thing. So I have 2 children. They're both teenagers, right? They're
right.
13 and 16 right now. And I obviously wonder, well, what's their life going to be like in 10 years? Because it will be vastly different than mine was, right? When I was their age, there was no internet, right? The big technology in the house was cable television, right?
Oh, and imagine me. It was COBOL and Fortran and IBM. Okay, go ahead. Keep talking.
Yeah. But I mean, like, how different? I mean, the type of jobs that I have done, my peers are doing, like, didn't exist. When my father was my age, when he was working here. So like their life is going to be very different. How they interact, what they do, how they interact with society, just what the environment is like is going to be very different. And I very much want it to be better, to have them have more opportunity to live, in a society that treats them better and gives them more chance to do their best work every day. And so that's, I think that's my worry. I will say that, like, the AI thing, you always get like, is it going to end the world? Is, Terminator?
No, so it sounds like you're in the ethics space, the ethics, the morals of AI in society and your children.
I think it's more of a power discussion. I'm less worried about the technology and potentially how the technology is regulated in and of itself. I'm more worried about the use of it in a way that concentrates power and concentrates wealth more than we see today, right? That my hope and frankly, my expectation is that we will see this as a way of frankly democratizing society more power to individuals, more freedom to individuals. And if we see it just as more of a concentration of power, as a more of, the very big technology companies giving even bigger and more powerful, that doesn't seem like a good outcome to me. Because then you're kind of hoping for the benevolence of somebody who is not accountable to most of the people in the country. And that for somebody who works in technology, I'm a little anti-technology, or at least anti-technology industry from that standpoint. And frankly, I'll just say one last thing, and just to mention my company one last time, that's the reason why we work with small institutions. We work almost exclusively with financial institutions that are community financial institutions or credit unions. They're all less than 10 billion in size. They represent about 15 to 20% of the banking market, but there are over 9,000 institutions that do that. And for me, having access to capital systems, to capital markets, access to money, things that you need to do just to live your life as an individual, let alone start and operate a small business, that is a huge thing for me as like a personal goal and what we're trying to do with the company. But but also I think it's the best thing for the company, for the country. And I would hate to see a collapse of that, where there was less and less access and more control from very large institutions, because in this area, particularly access to money and access to things that you just need to do life, less choice in my mind is not a good outcome for us or the country.
And with that said, how can people reach out to you? I don't want to take advantage of your time.
Sure.
You've given us so much. We could talk about this for a while. I've got so many other questions. We're going to have you back. But how can they connect with you?
Yeah. So my company's Mindspan Systems. We're at mindspandinc.com. You can reach us on all the socials. For me personally, if you have a question or want to reach out, LinkedIn's the best spot, and I'm Rich Edwards on LinkedIn.
Well, with that said, thank you for the privilege of your time. Good afternoon, good evening, and good morning, depending on where you are. And thank you for listening to Pivoting to Web3 podcast. And I'll be talking to you soon with another exciting guest. Thanks for listening. Thanks for listening to Pivoting to Web3 at pivotingtoweb3.com. Make sure you hit the subscribe button so that it gets to you with every episode that comes out. We have lots of great opportunities, limitations, and downward spirals being revealed by our guests. And thank you in advance for all your reviews and comments. I appreciate you so much. I look forward to serving you in the next week's episode.